Welcome back to the Pleb Underground. Guys, we've got an awesome guest today. Ulric is joining me as my co-host, and we've got Pierre Rochard to sit down and discuss the super fun, ever divisive topic of the Bitcoin treasuries. Now, we're going to bring up Ulric and we're going to bring up Pierre in a second, but guys, you know the deal. We're going to give some love to the Pleb Underground sponsors first. We'll be right back for what should be a very interesting conversation. Here we go. Pleb Underground is sponsored by Archimedes Emporium. Discover the pinnacle of precision engineering, starting with their Bitcoin logo wall clock, meticulously machined in Maine from a solid block of aerospace-grade aluminum, ensuring unparalleled durability and performance. Experience the difference of a product made without compromise. Head on over to Archimedes Emporium. All right, let's bring up, I'm going to bring up Ulric here. Ulric, welcome to the stage.
Good morning, Phil.
Good morning. Yeah, that's right. It's going to get super interesting. And let's bring up our very special guest, return guest.
Hey, Phil.
Pierre Rochard, man. Thank you so much for joining us on Pleb Underground. I really appreciate it.
Thanks for having me on. Hey, Ulric.
Hey, Phil. Pierre, nice to see you, man. Oh, it's early. I'm calling everyone Phil today. Here we go.
Everybody's Phil. Okay, so let's dive into this first here. I'm just gonna pop this up on the screen. Okay, so you're doing the Bitcoin for corporations. I noticed at the top over here we've got the strategy and Bitcoin magazine. Would you just tell me about the Bitcoin for corporations strategy? We'll start with that.
Yeah, sure. So George McHale over there is leading Bitcoin for corporations. It's I think like a project within Bitcoin Magazine, BTC Inc., David Bailey's empire, that is one, partnering with strategy to develop education for corporate adoption, and two, providing education to corporations that are going on this journey of accumulating Bitcoin on their balance sheet. So George asked me to host their show. And, you know, I've never said no to a podcast. The idea of podcasting sounded really appealing. I think I've got like 3 podcasts going I've got one with Michael Goldstein and the Nakamoto Institute. Got one with my wife, Bitcoin for Advisors. And so just, I'm always looking for new opportunities to podcast about Bitcoin. In this context, it is for a corporate audience that is trying to wrap their heads around what does this all mean. So that's the context on Bitcoin for corporations. I'm not their representative. I'm just, a host on their show. And I think they're doing a killer job.
Okay, that's cool. Thank you. Yeah, because when I looked it over, I didn't quite understand. I thought that maybe it was a little bit different than that. It was a show / where we're also helping companies to build out this Bitcoin treasury strategy before they essentially either merge with a public company or go the route of going public.
So they have like a membership system. So if you're interested in taking Pleb Underground and adding Bitcoin to your balance sheet, you can become a member of Bitcoin for corporations. Question.
Yeah. So let's just say I hold Bitcoin, right, and self-sovereignty. What has to happen for that to change? Because apparently, if it's going on my balance sheet, something's changing there.
Well, so I would agree that it's Bitcoin for corporations, not corporations for Bitcoiners. Now that would be an interesting angle, and we could explore that of, hey, how to set up a C Corp, how to go through the S1 filing process with the SEC, how to IPO your own Bitcoin treasury that you already have. I think that's a great idea.
Of course. More people using Bitcoin, of course.
But Bitcoin for corporations is like, hey, you've got an existing corporation. They are no coiners. Let's get Bitcoin on their balance sheet.
Okay. So speaking to that point, right? I'm going to pull this up over here. This is from Treasuries, BitcoinTreasuries.net, right, or specifically a .net, BitcoinTreasuries.net article.
I think that's Rodolfo Novak, right?
Is it? Oh yeah,
he's-
that's right. It is Rodolfo.
I don't know if he just like has the domain name or like how involved he is in that, but yeah.
NVK, right? Yeah. Okay. It's the Cold Kite guy.
Yep.
Yeah, exactly. So the total value of Bitcoin held in corporate treasuries is estimated to be around 136 billion. Okay. So at this point, right? I mean, this does seem to be working.
We are
now,
so early.
Right? We're super early. We could see the exuberance. So you and I have gone kind of back and forth on Twitter a few times because my angle is much more of it's sad to say this, but it's closer aligned to like a Jim Chanos, which makes me feel old and wrinkly. No offense, Jim, super smart dude, but I just now all of a sudden aged myself. I'm kind of wondering though, what is your position on businesses that actually, like, does it matter that these businesses don't actually have growing operating revenue streams?
Yeah.
Outside of Bitcoin?
Yeah,
Like,
I think it matters a lot. I think it matters a lot. So yeah, I think it matters on two levels. One is their motivation to buy Bitcoin, right? So if you're running a very successful corporation, your operating cash flows are growing by 30 to 40%. And you look at Bitcoin's growth rate, let's say it's 50%. You're like, okay, well, it's a little bit more, but it's not like
It's not
life
world-changing.
changing. Yeah.
Right.
So like the valuation of the business is not going to, if anything, it could harm it. Right. So I think that's like Tesla, for example, like they bought a little bit of Bitcoin, but they're not super motivated to like double down and triple down like a corporation that maybe is not growing as quickly. And so, because really, if you're high growth, the free cash flow you're generating should be reinvested into the business, right? To keep growing it rather than buying Bitcoin and saving. So I think that matters a lot on that level of the motivation. The second way that it matters a lot is on the grip strength, right? Are they going to have diamond hands or are they going to have lettuce hands? So if the business is burning lots of cash and has negative cash flow, that's really, I think, the most challenging situation you can be in as a treasury company, because now you're like you're decreasing the sats per share, right? If you're having, because that money's got to come from somewhere, right? Either diluting the shareholders or for selling the Bitcoin. Now, in between those two extremes, there's companies that their business is mature. They've tried lots of different ways to get some growth going. It hasn't worked out. Putting more dollars into it kind of feels like throwing, good money after bad. And then they look at, okay, well, we're going to have cash on our balance sheet because we need that optionality in the future, because there's going to be opportunities in the future, whether it's from, new developments like AI or whatever. So there's really positive reasons for a corporation to hold cash on its balance sheet to have that optionality. And then it's like, okay, well, that cash is now losing however much percentage, right, from the inflation, that melting ice cube. And it's like, okay, well, you gotta put it to work. And Bitcoin's the best opportunity out there if you understand it. So then you put the cash of the corporation into Bitcoin because your horizon is greater than 5 years, right? So, and some even say like their horizon is infinite, right? They're never going to sell their Bitcoin. It's permanent capital. And so why would you go further into that extreme? I think it's really because in the fiat system, at least, you can borrow against assets that are on your balance sheet. And so you can have these Bitcoin on your balance sheet and be borrowing against them and not having to sell them to raise cash. And so, I'll pause there.
I want to interject real quick because this is a fun conversation. But what you described there was essentially when Michael Saylor went on a roadshow talking to Microsoft, and they basically laughed him out of the room. Other situations where Dell has flirted or suggested themselves, even GameStop. Like I don't know how much money GameStop is buying or how much Bitcoin GameStop is buying. what I see is these businesses successful, slightly unsuccessful, but they're businesses and they have an underlying aim for creating value. And they're kind of ignoring the Bitcoin proposition. Whereas all the companies that we see, the 136 companies that are publicly traded, most of them are generally SPACs. Most of them are generally empty companies created solely for financial engineering. And so I haven't seen a situation where it's the golden middle ground, where it's like, now we have this Bitcoin, this Bitcoin standard world where these businesses create value and save in Bitcoin. And do you think that's just, we're a cycle too early for that? What's going on?
Okay, so that's a great question. So in between the company that is burning lots of cash because it's got a horrible business, and and then the company, the middling company that is just, like MSTR was in 2020, just low growth, right? In between those two, you have the one that has zero operating cash flow, right? So they're not burning cash. They're not bringing in cash. I think that's totally fine. I think that you're okay. So let's say that I think that's a fine place to be, of having zero cash flow on the operating business side. And then you're asking, okay, well, I think that in your question, you have the premise that financial engineering does not create value. And I think
maybe I do.
Because you're like, well, either they're creating value or they're doing financial engineering. And it's like, well, maybe financial engineering creates value, and we can debate that, but that's my response to that.
I mean, I can't disagree with financial engineering creating value. I mean, I think that is subjective, because to a certain point, when you do financial engineering, there are a certain group of people that will end up gaining the value from this. So it's, I think it's a bit of a gray area. But the thing is that the thing that I wanted to go back to, though, isn't it? I genuinely feel like it's a double-edged sword, right? Like, we're, obviously we want Bitcoin adoption. Obviously, we want hyper Bitcoinization. We've always talked about how the corporations would have to start taking Bitcoin seriously, right? And this is all kind of part of the Trojan horse. But I just feel that maybe these companies right now, like, maybe these are just a necessary, and I hate to use this word, but kind of like a necessary evil to get to the next step, right? Like, kind of like the way that, and I hate to go back to this is going to make me sound like Jim again, but it's the .com stuff. It makes me go back to the .com and the pets.com and this and that. And it's like, Venati coffee, right? They couldn't sell coffee. They're kind of struggling and stuff, but hey, we could buy Bitcoin. And this all of a sudden extends our runway so that we can scramble and figure something out. So my question to you in this whole long drawn out thing that I'm saying is that, are these simply just necessary steps as we, essentially as Bitcoin takes over the, I guess the base of the financial system? Like, is this the speculative attack you were talking about in your article from 2014? Because I did read that before the show to at least prepare myself with your points for that.
So I definitely think it's part of it, and it's a logical first step to it. Now, to view it as evil is basically like the problem of, okay, Bitcoin adoption is going to happen. How do we want it to happen? Well, ideally, it would be the least fortunate in society that find out about Bitcoin and buy, the single mothers, grandparents who need it for retirement, who or otherwise, it's like the Social Security fund. It would be like the ideal first adopter for Bitcoin. But the reality is that it's much more random than that, right? It's also because it's also not the other extreme, right? I've never heard someone argue, oh, the elites got into Bitcoin before everyone else, and Bill Gates has like a huge stake. There's theories out there, but I've never seen any credible evidence that any of like the past elites became giant Bitcoin whales. Usually, it's just like random people. So I think that's part of the case here as well. But we have to get into what is Bitcoin, because I think this also is about the visions for Bitcoin that people have had over the past 16 years. So, we could caricature like the Bcasher vision of, hey, this is going to be payments driven. And it doesn't even matter if the payments are custodial or not custodial. It's just like that's the adoption vector, which I think, in the Bitcoin space kind of got carried over in kind of the Lightning vision of payments, Bitcoin adoption through the utility of payments. Then if we look at kind of the this on the savings side, right? Okay, well, now we're going to start splitting hairs within the savings use case, right? Because we've won, right? I think, Bitcoin as savings has achieved product market fit. And now we're seeing corporations and governments also adopted as savings technology. And it's raising all sorts of questions of, okay, well, how is this, going to work out? Because you're killing part of the value proposition of Bitcoin, right? Of, okay, you don't have to trust anyone. You can self-custody your keys. Once you have an institution, by its definition, and it doesn't even matter. Like, let's say the institution, let's say the corporation is holding its own keys, right? The board of directors has a multi-sig or something. Mm-hmm. The shareholders still don't hold the Bitcoin, right? And so I don't think that like has any practical difference vis-a-vis like the corporation using a third-party custodian. This is where I think I have disagreements with Predator on. Like he sees it as like, no, it's better to have fewer, to not have a fourth party. I don't know. Maybe at the margin, but okay. So then on the speculative attack side, the real question is how do you draw in fiat with leverage? And the way that it's happened in the past is that you have degenerate gamblers going 100x long on BitMEX, and that or even just margin trading on an exchange like Kraken, where I used to work. And it's a huge product for them that they lend out dollars for people to go gig along, Bitcoin or Shiba Inu or something like that, right? And then they get liquidated, and they earn transaction trading fees and the lending and all that. So very, very, works out very well. The other way to do it is with futures, right? CME futures has grown into a massive market. And so I think that the corporations really represent a third wave of modality for leverage that, to me, the tremendous value of their financial engineering is removing the risk of liquidation, right? So one of the problems with even like with Unchained Capital, right? If the Bitcoin price crashes, you have to put up more Bitcoin, or they'll sell the Bitcoin. With MicroStrategy, the way they've engineered things is that you have these perpetual preferreds where they don't have a maturity on them and they don't have a liquidation trigger. So Bitcoin could go down significantly and you still would not be forced out of the position. Now, would the mark-to-market value of your MSTR shares go down? Yes, of course they would, right? It would be, you could be down like 99%, but you wouldn't be liquidated. You
wouldn't be a forced seller.
MSTR would not be a forced seller of Bitcoin, and you would not be a forced seller of MSTR, assuming you did not go margin long on the stock, right? And so that represents a completely new form of leverage, which I think is a lot safer given Bitcoin's cyclical adoption. And, with the whole caveat that basically, let's say they're paying 10% interest, right? Mm-hmm. So to me, like the big risk is long-term Bitcoin's growth rate is less than 10%. I don't think that will be the case. I think long-term, the Bitcoin growth rate, even let's say over the next like 5 years, will be somewhere between 30 and 50% annualized. And so that, I think, makes it where, and you can only achieve this in a corporate structure, right? So you can't achieve this as an individual. Nobody will lend to you on those terms. There's actually an open question as to how many people will lend to Saylor on these terms, right? Because this is one of the criticisms that Chanos has, is that you're not going to be able to sell a lot of these preferreds. I don't agree with that. I think that there's a huge market and that the performance is going to attract a ton of capital. And so now, you can say all that and still, like, I would never recommend somebody to buy MSTR over BTC.
Okay. See, that's the point.
Right.
Sorry, continue.
But before you go on and continue with that point, you say you would never, but the collective society, the collective of the Bitcoin treasury, I guess, influencers, I don't want to say propaganda, sounds negative, but the people who are pitching this this product or these products, they have publicized and been proud of it. That they've said, I've sold all my Bitcoin and I'm 100% in MicroStrategy. And I'm looking at that, I'm like, regular people, the single moms, the widows that you talk about, Bitcoin, and the people that should benefit, they're going to come into Bitcoin in 2025 and they're going to see these people with a platform. And they're saying, Bitcoin, you should buy MicroStrategy because they bought Bitcoin, and they lose the use case of why Bitcoin is valuable in the first place. So I understand that you may actually be a special proponent of that society because most of them aren't speaking like that. I'm saying, I'm sure you've seen it.
Yeah.
This is why we don't care on.
I would argue they should never have held Bitcoin. All they wanted was financial exposure to Bitcoin. They had to hold Bitcoin because MSTR didn't exist. And now that it exists, they're in the right product for them. And so that's fine.
For a Catholic, you sound like a Calvinist a little bit right there. Yeah. If you get that Christian joke there.
Yeah, absolutely. But I think that it comes down to what are your preferences. It's subjective, right? So for example, for me, the reason why I want to hold Bitcoin is because I have this autistic attachment to auditing the ledger. I want to be able to independently verify the total supply of Bitcoin using my own open source node and compare it to what I have, in Bitcoin. And so now, do I expect the world to share that autism? I'd say 10 years ago, I did more so than I do today. Now I kind of realize I was installing Linux in high school on computers. I was, normies are not like that. So I think that Bitcoin self-custody and cold storage continues to be and will always be an option for those who are tech savvier, younger, more, willing to underwrite those risks. And that, to your point about all the retirees and whatnot who are just passively buying the S&P 500 index, soon they will passively have financial exposure to Bitcoin. And so they will be helped on the financial exposure side. And then we can debate, okay, well, what's the, let's say, what's the risk adjusted return, right? Let's have the risk of the government seizing MSTR's Bitcoin or the risk of Coinbase getting hacked and their custody, all the Bitcoin of the corporations gets stolen, all of those risks. You could argue, and I think this is what I've seen some on Twitter argue, is that yes, Bitcoin treasury companies can outperform Bitcoin in the short term, but in the long term, because of all of the risks associated with it, they'll blow up. Either they'll become over leveraged and they'll get liquidated somehow, or the custodians will get hacked, or the governments will seize them. And so then it's a matter of what's your how much do you expect those risks to materialize, right? And so
yes,
I think that it's really maybe I'm biased because I just experienced this in the Bitcoin mining industry of interacting with the government, especially here in the United States. So I'd really put a huge question mark on the international Bitcoin treasury companies. I'm like, I don't know, do you want to set that up in North Korea and or in China? That seems like that's going to get seized pretty quickly. But in the United States, I could see a path where the Bitcoin treasury companies actually end up controlling the government, much like banks and corporations already control the government, right?
That's right. I agree.
All the lobbyists going in there. And that what I saw with Bitcoin mining was that even though we were Bitcoin miners at scale and we were a large corporation, our incentive was to represent not only the whole Bitcoin mining industry, including people mining in their garages, because it's a it's even just like a great talking point of like, actually, there's just like you, a normie, could mine Bitcoin at home. It's not this huge like scary monster. But also defending Bitcoin as a whole, right? Because they're like, well, okay, what's the value of Bitcoin? Because if that has no value, then Bitcoin mining has no value either. It's a complete waste. And so, we would talk about, hey, this is a permissionless system for it's open source and you can control your own money. And that's the value proposition of it. That's why so many people want to buy it. And I think that will hold true for the treasury companies as well. As they are involved in lobbying, they're going to actually lobby for self-custody. And I know that sounds really paradoxical because, people like Predator are like, no, they're going to lobby against self-custody so that more dollars go into treasury companies. I just don't think that's the case at all. I think that they're going to want more people holding Bitcoin, right? They want more demand for Bitcoin in any form possible. And so they're going to be lobbying for removing restrictions in every way. And so, enabling create redeem on the ETPs, in kind redemption. So there's all sorts of improvements that are going to get lobbied for, including, look, like I know that a lot of the lobbyists that are hired by Bitcoin treasury companies for the past month have been lobbying for a de minimis tax exemption on transactions less than $600 to get it into the tax bill. Like, so like that's my view, as a quasi insider. I kind of feel like I've got, one foot in social media, the other foot like behind the scenes. And I think that there's a lot of, that's why I'm bullish on the treasury companies. I'll put it that way, even though I don't have any financial interest in them.
So on that topic, I'm also thinking of this, right? And again, it's just a tinfoil hat take. I kind of wonder, based on the narratives that we're seeing play out in social media, is there any possible truth to the kind of idea that whoever it is, or however that narrative turns out, there's kind of this separation that is occurring between Bitcoin, the asset, right, and Bitcoin, the network? Like we know that, right, there's the big B and the little b, but we know that they can't exist. One can't not exist without the other. They must, in my eyes, they must, right? They must exist. They must coexist. And I get this kind of, and again, it's just a feeling or the impression that somehow this is being separated. Like we're not even talking about Bitcoin, the network anymore. We're just talking about Bitcoin, the asset. Do you find, is there any truth to that, or am I just totally off in the woods? It's totally okay if I am.
So, I mean, we have to keep in mind that there is a continuity here in terms of the network and the asset. So the network is maintaining the UTXO set, right? As you mentioned, a lot of those UTXOs are held by custodians like a Coinbase or an Anchorage or Fidelity, and that those accounts are controlled by these corporations. And that then it's a matter of, do you trust that structure on top of the UTXOs? And what do you think of that? So if you think that it is just that it's awful, then you could say, well, now there's a separation between the asset and the network. If you say, well, look, I understand it's a bunch of middlemen, but they're also somewhat competent, right? So meaning that you have software engineers producing enterprise grade code that is, if they lose money, that's a problem for them from a legal liability perspective, right? There's criminal and civil penalties associated with embezzling those Bitcoin or otherwise violating contracts. And, there's lots of lawyers involved, and as Sam Bankman-Fried showed, you can go to prison. So, it's like, it's not a joke to run one of these companies or to work there. There are significant responsibilities, and they get paid to do the work, right? They get paid custody fees by the corporations. And so it's not like, then on top of that, the corporations themselves, they're audited by auditors who also have civil and criminal liability. There's Sarbanes-Oxley that was passed after Enron that creates these internal control environments that are also no joke, where everything has to be locked down and everything's reviewed, and there's lots of teams that are like paid to do all the cybersecurity stuff and all this stuff. So like people have been saying like, hey, Coinbase is going to get hacked. They've been saying it for a decade, right? So as far as we know, outside of some theories out there that, oh, there's actually no Bitcoin at Coinbase and, blah, blah, blah. It's like, I don't buy that there's like a multi-year con happening where the auditors are getting the wool pulled over their eyes. I could be completely wrong, but and that's why I keep my Bitcoin in cold storage. But it seems very improbable to me. And so that's where I get that there's lots of costs associated with it, but I think there's a lot of benefits from it, which is that maybe generally speaking, it's better to have professional management than grandma managing her keys.
I mean, yeah, I can't I can't disagree with that. Having helped my father with his stuff, so yeah, I can't disagree with the grandma part.
I help my family, in certain aspects. So I get it, and they're of age where they should be able to handle it themselves. It's just a certain demographic, the Linux users and people who like to. Bitcoin is still a technologist kind of fringe interest, and it hasn't really matured to commonplace for the common person. We look at these smartphones, and they don't, maybe 30 years ago it would have been rocket science and science fiction, but nowadays everyone uses it. Maybe we have a couple decades before it's a common technology. Oh, I'm sorry, Phil, you wanted to add on to the conversation.
Oh, no, I was gonna switch gears because we only have an hour with Pierre, so I was gonna move it along to because I watched the great discussion that you had with Jim on Preston Fish's podcast, and I had two specific segments that I wanted to play back for us, just to get your additional takes on them. So here, hold on a second. Let me just, I'm going to pull this up. I apologize if it's super loud. Here we go. So here's the first one.
So, we'll see. I mean, not only do we have the other Bitcoin treasury companies issuing hundreds of millions of dollars, but we have Saylor himself continuing to do it.
And we could eventually have the U.S. Treasury doing it as well. That President Trump has signed an executive order asking for, one, establishing a strategic Bitcoin reserve, and two, finding ways to accumulate additional Bitcoin on the balance sheet. And so I think that there's going to be a lot of big buyers over the coming years.
Well, that's the ultimate irony, right? Bitcoin was supposed to be outside of governmental spheres, right? That was the ethos to begin with. And now Bitcoin proponents are hoping that the government gets involved.
Okay, so that's the first one that I wanted to play. Okay, so look, I have had a lot of time, a lot of difficulty with the mental gymnastics around this, right? Because I've understood, right, that yes, okay, I get it. We need, we want businesses to hold Bitcoin, but at the same time, right? At the same time, I can't help but see this type of situation where we see what I believe to be inferior businesses that quite possibly maybe should blow up. Maybe they don't need, maybe it's not Bitcoin that's the answer. Maybe they need a business that's worth running, so.
Well, I mean, we could zoom in on that because I think that's like a key part of it. Goes back to like the value of the financial engineering. Because it's like saying like, oh, well, Netflix should have gone out of business mailing DVDs instead of getting into streaming.
Okay, hold on though. I just want you for 1 second. That's the same type of example as Amazon, and the point is that those businesses though were able to show that they were growing their revenues over time, and their cash flow from operations was growing. So even though they were in debt and they kept issuing more debt, they were actually growing that revenue.
Any example of a business pivoting, right? Like businesses pivot into new opportunities all the time. It's not controversial. I think the controversy here is what value to society does it bring to have a company pivot from a bad business to just moving numbers around on a spreadsheet and let's say but I wanted to bring this up earlier. You can have bad Bitcoin treasury companies.
Oh,
So
yeah, absolutely.
ones, for example, where
We're going to try to get
the
to that.
management team is just like maximum extract, right? Like they are paying themselves handsomely. The insiders are getting discounted shares. You can do all sorts of shadiness. So I'm not saying like every Bitcoin treasury company is angelic, but
No.
I'm saying that the ones that let's do it in the ideal form. I think that they're really the financial engineering that they're accomplishing is twofold. One is that with the exchange traded products, you have an ecosystem of authorized participants around those products that compete against each other to deliver Bitcoin to the trust in return for shares and vice versa. And so they're the ones that are creating and redeeming shares of the ETF, right? Like IBIT, for example.
Yes.
And so these authorized participants, one of them is JP Morgan, by the way, which people pointed out as pretty funny because that means that, they're involved, right?
Right.
And they're
for
making
IBIT.
money off
Yep.
of it. They're making money off of this because Bitcoin is so volatile that you got to create and redeem a lot of shares, right? And you've got a nice spread. So with the treasury companies, they do not have authorized participants, or rather they only have one, and that's the company itself. The company itself has an exclusive monopoly on the creation and redemption of its shares, of its own shares. So they can run the ATM program to create more shares, or they can do share buybacks to destroy shares. Phil, you were going to say something?
Yeah, but I just brain farted because
Well, I want to say something before you continue. Like
Yeah.
some people say that these Bitcoin treasury companies will bring about next crypto winter, Bitcoin winter. Some even compare it to there are some bad Bitcoin treasury companies losing trust in the entire industry based on some of them failing. I can harken back to 2017. I was brand new into crypto, Bitcoin back then, but the ICOs happened then, and the ICOs drove the market up and also brought the market down. However, some ICOs are still around. Tron is a top 10 cryptocurrency, and Tether runs on them for the most part, as far as I know. I'm pretty sure there are other ICOs, but that's one that comes to mind. ICOs brought the market down. Is it likely that these Bitcoin treasury companies will bring about another bear market, yet still maybe Metaplan and MicroStrategy survive? CEP. I have some CEP. Oh my gosh.
Yeah.
Okay.
Well, so I think that if we are going to draw an analogy to ICOs, I think then we have to look at, well, what's different, right? What's different is that with the ICO, they raise the capital, quite often Bitcoin, right?
Yep.
And then they would spend it either on going to conferences and dressing up as furries, or on paying lots of software engineers to like write white papers and to write all this code that is highfalutin, whatever.
Vaporware. Yep.
Vaporware. If it didn't just get embezzled outright, like so. The
other EOS. Sorry.
Yeah. Well, EOS is interesting because they actually still have a huge Bitcoin treasury.
Right?
So you could imagine like they don't.
Oh, you told me that. That's right. Yeah.
Yeah.
Are they a Bitcoin treasury company?
Yeah. So let's look at the primary difference, and this applies to XRP as well. They are not making any kinds of promises to the token holders, and by their SEC or sorry, their litigation filings against when they're fighting the SEC, they're like, the reason why we're not a security is because we're making zero promises to anyone that we're going to do anything for anyone. And that these idiots are just buying this commodity from us. And we're not, that's it. That's the end of the relationship. And that's why it's not a security. A security creates a relationship where you are voting for the board, and the board is your fiduciary, and they are representing your interests. And if they don't, they'll get sued. And so then that board hires a management team, also has a duty of care to grow the assets of the company and to create value for the shareholders, for the common stock. And so I think that is materially different. And that's, so we can start with just kind of the baseline of like why I think tokens are S coins even if they have Bitcoin in their treasury, because the token does not have any kind of claim in any economic or actual, legal sense to the Bitcoin in the treasury. The Bitcoin in the treasury is usually held by some kind of foundation that's like a nonprofit, and these people just leech off of it and do nothing, as far as I know, right? For a decade. Okay, so
Yeah.
Now so that's fine, but in terms of the value creation of the engineering, I think that one, you've got the monopoly on the issuance, right? And that's what allows them to issue the Bitcoin, or to issue the shares at a premium and to acquire more Bitcoin. And what that reflects is that they are capturing the value that would otherwise have gotten captured by authorized participants on the ETFs, right? So like JP Morgan would have gotten that money, right? So essentially what one is that it funnels that value back to the shareholders of the company. And I think ETFs should do this as well. They should not have authorized participants all making all the money, and then the ETF holder has to just pay fees, and they only lose sats per share, right? Okay, so that's one. Two, though, it's the leverage, right? And so you can have your view on leverage is bad or good, and it's going to end poorly, it's going to do well, whatever. But the point is that the common stock shareholder captures the value between the interest rate the cost of the debt and Bitcoin's performance. And so there is value creation happening right there. And you can say, well, the only reason why there's value creation right here is because the fiat system exists. If the fiat system did not exist, there would be no value creation. And I say, I agree. That's how we get from point A to point B. Okay. And so ultimately, there will, like, the MNAVs will go to 1 post hyper Bitcoinization, because the mission will be accomplished. And you could liken it to any kind of industry. Like the iPhone started very expensive and then they got cheaper. It's just a matter of, we need to get, and Jim Chanos pointed this out as well. It's like Wall Street is very slow to get the paper going, but once it gets going, it is very efficacious, as he put it. And so this is where, like, there's going to be a massive amount of fiat debt issued for buying more Bitcoin, and that's going to drive the Bitcoin price up. And ultimately, I think that fiat debt is going to get paid. I think it's going to get paid because the value of the Bitcoin will have increased so much that either it gets refinanced or, some Bitcoin at the margin gets sold to pay it off. The issue, well, I you could go in either direction on this one. One is that all the other assets in financial markets are underperforming Bitcoin, and they will continue to underperform Bitcoin because of the 21 million scarcity, right? And the adoption happening. And so in that situation, you would expect all of the capital to gravitate towards Bitcoin and away from all of these other great operating companies, right? So what effect does that have? It's going to make the operating companies cheaper, right? So they'll have a lower PE ratio and they'll keep doing their thing. But eventually the government either has to do, there's 3 things the government can do in a speculative attack, right? Raise interest rates, capital controls, or have a currency reserve. And so either the dollar collapses due to government incompetence because they can't run a playbook to defend their currency for whatever political reason, or they adapt and they back the dollar with Bitcoin. And I think that for the stability of society, the latter would be preferable. We can debate whether it's realistic. And then we can also debate philosophically, well, wouldn't it be better to just like force everyone into self-sovereignty, right? Like you could take an accelerationist view and say it would be better if the dollar collapsed, that Coinbase got hacked, and that self-custody, cold storage Bitcoin was really like the only sane thing to do, because anything else, you're going to get scammed. Like it's going to get stolen. And like, that's the society we live in. that sounds pretty like dystopian. Like, I don't think that reflects what kind of society people are going for. And so I think that ultimately there will be lots of intermediaries between normies and Bitcoin that will intermediate both as a store of value and a medium of exchange. And that is going to be offensive to the self-sovereignty cypherpunks. But what they get is they have the freedom to go be self-sovereign cypherpunks. And they didn't before, and now they do. And that's the beauty of Bitcoin, right? Like, so I think that's where I come down on it. Sorry to ramble.
No, not at all. No, I appreciate that. Okay, couple of things here, because again, respecting your time. Okay, so the angry Chihuahua says, Dieter Bob, right?
Yeah.
Always gets upset. So we love him. I love his charts. But don't cry about the charts, Dieter. Okay,
thanks for the follow, Dieter. I appreciate it.
So he's saying, so a zombie company is not a zombie company simply because they issue shares to buy Bitcoin. And so he and I have had this discussion several times. And this is where we get into that discussion where you and I had this tweet storm back and forth back in June. And it's just, look, I don't have an issue with, obviously, right? Like you want Bitcoin to be adopted. So you want companies to hold it on its balance sheet. But to your point, your point from earlier, I want quality businesses that can actually afford to hold Bitcoin, not because they're necessarily playing games with their shares, not because necessarily they're the Wall Street darling at the moment, but because they have products and services that provide positive operational cash flow, which allows them to navigate those storms. That to me is like, and of course the argument against that I've heard is, well, Phil, we have to start somewhere. Right? Like we got to start somewhere. Somebody has to hold this first. Somebody has to be the example. So that's where I kind of, like I get afraid. I get very afraid that we're, that a lot of these businesses are not really going to make it.
So I think that you can live in a world where if you look at the statement of cash flows, you can have $0 from operations.
Mm-hmm.
And you're raising all the dollars from financing, whether it's in the form of equity or debt. And then you're putting all the dollars into Bitcoin. And let's say, you still have some operating costs. So let's say it's like 0.5% in the operating costs that, and then you lever up and now you've got the interest expense as well. And so now you're paying the interest expense out of more financing, not out of any operating cash flows. And so you're raising capital from equity shareholders to pay your interest expense. But that I think that's totally fine.
I
think that's fine. I think that the risk here is not for the company, it's for the equity shareholders.
Yes.
Where if things go south, their shares are going to get massively diluted, and they could even actually lower the the Bitcoin per share because they're diluting to pay the interest expense on the debt, right? And so that I would expect to happen if we're in a bear market. And that's and then it's like, how long is the bear market before the pain for the shareholders is so much that they somehow get into a hyper dilution cycle, like Terra Luna.
Okay, hold on. I need to interject because I think this goes perfectly with my last question. Because again, respecting the time, I'll give the last few questions to Phil. But I was looking at the narrative around the value proposition MicroStrategy, particularly, is interesting to me. Even from his own website, of course, he's going to prop up his own product, but it always starts at August 2020 when he first got into Bitcoin. Now, the catch with that is I feel like we like to carry on narratives like, oh yeah, Bitcoin from the Genesis block to now, look at how much house you can buy. Well, I wasn't around at the Genesis block, and maybe Pierre was a little closer to that and Phil was closer to that, but I wasn't around there. It's like, so what's my CAGR? What's my expected return, if you will, whatever type of number, whatever type of metric you want to justify your position for a future outlook. And so when I see MicroStrategy 2020 versus when they launched their playbook, which is November 2024, and it's like the 21-21, Then I look at, okay, well, how has MicroStrategy done since they advertised the playbook? And I know he's been building it, but when he pushed that out there, it's like, wow, it's 42 billion. And then you look at the performance of MicroStrategy. I pulled up these numbers. We're not going to show them, but essentially from November to now, MicroStrategy has only gone up about 11%, 12%, but Bitcoin has gone up 28.7%. And also MicroStrategy dilution from then to there has been a roughly 51% in shareholder equity. So if you own 10% of the company in November, you own 5% now, if you never bought any more. So my question is, like, even in the midst of a bull market, we're in a bull market, we're going up all-time highs. It doesn't seem like it's showing the performance that you would expect from a derivative of Bitcoin, a higher risk form of Bitcoin. How do you, and of course you don't speak for MicroStrategy, but how do you speak to the poster child of this playbook? It doesn't seem to be outperforming Bitcoin in the same time horizon.
Yeah, I agree. And I think the reason for that is because the MNAV went too high. And so, in November, I don't know what it peaked at, but
it was peaking before that playbook was launched. That's right. It was.
But I think that you're ascribing the are you saying that the catalyst for the underperformance is them advertising the playbook?
Well, I'm just saying that if you were to look at a point in history where you can reassess what is MicroStrategy, just like you can reassess Bitcoin before the ETF versus after the ETF. At that point, people were buying Bitcoin in a different format. So you can't say Genesis block to now. You would probably say ETF to now, or maybe you'll say post Mt. Gox to now. Something that changes the way the world looks at the asset. And so what I'm saying is I think that the world should look at MicroStrategy differently post this 2121 playbook, because they're approaching it in a much different way, or at least in a much more extreme way, where they're increasing the way they're increasing their buy rate. They're advertising where they're going with it. They didn't do that before November 24.
Okay. Yeah. No. So that's a good point. Does that have an effect? I mean, look. Let's look at the underperformance. What has caused it? I think the cause of the underperformance is because the MNAV went to over 3x. And so it's just like with Bitcoin, like, why did Bitcoin crash? It went up too quickly, and then it corrected. Now, you could argue that there's no structural reason for why the MNAV should re-expand, that you could say there's no way it will ever go back to 3x because you've got all these competitors, and that's Chanos's perspective.
Yeah.
And you could even argue further that the current 2x MNAV, they're going to struggle to defend it, and it's going to get ground down, right? Maybe. I don't have a view on it, but I think that there's a really strong argument for why it would never be below 1x outside of just 1 month of bear market, that total capitulation bottom, and that 2x doesn't seem like it is too expensive and rich at this point, right? Like, they're way under leveraged, I would argue. They want to create a new market essentially for fixed income, and you could say, hey, that's a really risky. It's risky in the sense that the probability of that market coming to fruition and existing is low. And so they're not going to be able to place a lot of perpetual preferreds. And so they're not going to be able to lever up on those great terms where they can even turn off the interest expense, right? On STRD, they can say, oh, we're not going to pay any interest. And so you can say, well, look, nobody's going to buy that security at scale. And so they'll never be able to lever up and grow into their current MNAV. And so you'll continue to have, underperformance relative to Bitcoin. That's a totally fine perspective to have. I think that it's just like, it's unrealistic in the sense that Wall Street wants to always find more ways to make money. Yeah. And if these perpetual preferreds give them that they're going to pour money into it. But
the perpetual preferreds, before I want to show one last clip before we let you go. But the perpetual preferreds, though, is that dividend not actually being paid essentially from MSTR, like from the MSTR shares?
Well, it depends on what ATMs they're running. So if they're only running MSTR, yeah. But there's no reason why like the STRF dividend couldn't be paid by STRK issuance.
True.
Right? Like
that is true. Right.
And so the question is like the preferreds, they started at $85. They're now at $120.
Yeah.
And Chain has even pointed out they've outperformed the common stock.
Yeah.
You could say, well, like, but the thing is that going forward, that means that Sailor's going to have cheaper financing, because if it's 10% at $100 and it goes up to $120, now it's like 9%, right? And so the higher the price of the preferreds goes, the cheaper the future financing is for more leverage. And so I agree that we haven't seen like torque, but the reason I think we haven't seen torque is because they haven't levered up. They're still, I think, less than 10% leveraged on the preferreds. And then there's the convertible bond, but I think that's a whole other. And he's kind of implied that he's not like he's not a huge fan of convertible bonds anymore.
Yeah, I don't blame him. Can't really. I mean, to a certain extent, right? He could provide a time frame, but he can't really control what's going to happen and how many people are going to convert those bonds to common shares and start dumping them. Yeah, so it's definitely weird. Okay, I know we only got 3 minutes left here. Let me pull up this last clip that lasts approximately 1 minute. Okay, here we go.
Rapid fire round
to kind of talk your point, and then I want to do about 5 minutes of something that I think is really fun and that the listener will enjoy. So go ahead. Jim, do you want to go first or Pierre?
Sure, I'll go first. Look, I think Pierre and I might agree on more things than we disagree, which I hope the listener and the viewer understands. You can have fundamental differences in viewpoints on pricing and still see a lot of the concepts to be consistent with each other's viewpoints. I would think that maybe the biggest difference we have, with the exception of agreeing on agency risks, is that I do believe the increased amount of supply by the Me Too companies is really important here. The markets are only so big when it comes to issuance. That's been my history over 40 years. When you see issuance, I've always joked Wall Street has a printing press, just like the Fed. It usually takes a while for it to get going. But
right? This is exactly what you said. Okay. So this kind of spooked me, okay? And I'll tell you why. Because I'm in my 40s, so I've already seen a few crashes. I've already seen a few market downturns. I was literally just getting my feet off the ground and running when the great financial crisis happened. I was on vacation when everything disappeared. Anyways, my point is that I've seen this time and time again. Wall Street bestows the money printer to whatever industry or business for a certain amount of time, and then metaphorically they take it away, right? And I give the example of Lehman Brothers and Bear Stearns, and I understand those assets are not the same thing, and whatnot. My point is that those businesses, right? The day before Lehman Brothers went under compared to the day after, their financial picture was the exact same thing. All that changed was the perception. So what I get really worried about for these Bitcoin treasury companies is that, yes, Bitcoin is amazing, right? Yes, Bitcoin is a finite asset. Unfortunately, human stupidity and greed are infinite. So that's what I'm afraid of.
Well,
what are your thoughts about the Wall Street money printer?
I'll come back on the podcast when I agree with you. When I see just like a stupid amount of debt going into this, and it's like, oh, this is
so we're not there yet.
Leveraged. I think right now it's under leveraged. I'll come back when I think it's over leveraged.
Fair enough. Okay, guys, we got to go. I am super sorry. Pierre, thank you so much for joining us. This was such an amazing episode.
Thank you for being here, sir.
Don't forget to check us out on our audio-only platforms, Apple Podcasts and Spotify. If you want to stream us out, check us out on fountain.fm. Everybody have an absolutely awesome weekend. Thanks again for joining us.
Don't forget to subscribe, like Pleb Underground. Have a good one.
Peace.